Hello folks, it's Wednesday after the markets have closed. We had some movement today in the precious metals and in the equities, of course in the wrong direction if you're a bull. Let's look at the charts. Here's gold in the monthly time frame. We ended up closing last month's candle on the low of the bar, which is bearish, and now you can see this little small body of a candle. That's the start of the current month, opening at the low of last month's close. Still in bull mode, suggesting that the primary trend remains up, but on a sell signal, energy is very low. This is still a continuation pattern, which suggests, that when price breaks higher, that we'll get another leg that looks like that, which will take gold up to 2,500, 2,700, something like that. Now that'll be negated if gold drops through the bottom of this sideways trading range. In the weekly time frame, we can see again a decisive move lower. Definitely looks like gold rolled over from this top and is headed lower. Unfortunately, there's no support in this time frame. I mean, we could, if we wanted to, draw a support resistance zone that looked something like that. Although it's more of a support. So we can see support here, support, support, support. So potentially it could act as support again, coming in at the 1700. And of course the 1700 will act as a round number. So we might get some support from the round number. MACD in bear mode on a sell signal, energy very low. So gold does not look good in the weekly time frame. Here in the daily, we can see just steady ticking lower, a little bit of a support. That's what we were just looking at. 17 and change, 1700 and change. And again, potential for 1700 to act as round number support, which will be coincident with the lower median line of this shift pitchfork. MACD in bear mode, energy very low. So precious metals, I would expect, are going to continue heading lower. This is gold versus the US dollar in the upper frame. Lower frame is gold deflated by twice the CPI. Based on this chart, I would expect that we're headed for another test of the lower side of this downward sloping channel, which is coincident with this horizontal support resistance level. If we look at the comparable level for this, unfortunately, it's lower. It's at least 1670 something, 1670, and potentially all the way down to 1550. I mean, we could be at the start of a big move downwards in the metals, unfortunately. Silver in the monthly time frame. So we looked at this chart just a few days ago, and price was sitting on this level as support. Obviously, it has dropped through that level now, so has broken that support level, and we can see that the current month candlestick, hard to call it a candlestick, it's just a little flat bar at this point. But anyway, the current month's candle has opened at the low of last month's. Notice that the candle from last month closed at its low, which, that's always a bearish sign. Doesn't matter what market it is, that's always a bearish indication when price closes at the low of its bar. MACD almost fully into bear mode on a sell signal. Energy is very low. Silver in the weekly, again, has decisively pushed through this support resistance level. Can't really expect that to act as support anymore. What we might expect is whenever this move finishes its downward direction, that it would bounce and test this level from below to see if it is acting as resistance. But we've got at least a few days probably before we see that happening. Notice again that price is at the low of that bar. Of course, we've got 2 more trading sessions before that bar closes. MACD in bear mode on a sell signal, energy very low. Silver in the daily, we can see decisive move lower today, and that move appears to be continuing to the downside this evening. MACD in bear mode, energy very low. So this is silver versus the US dollar in the upper frame, deflated by twice the CPI in the lower frame. Again, same thing as gold. Looks like we're headed for a test of the lower side of this channel, coincident with this horizontal support resistance, or support, well, mostly a support level. Hasn't really been tested as resistance, which is coincident, unfortunately, with the 1370 level in silver. You know, notice in the monthly time frame, there really is no support below the current level in the monthly time frame. That 1370, 1375, that really is the next horizontal support level in the monthly time frame. So again, we could be watching the start of a substantial move lower in the metals, as much as it pains me to say that. Here's the mining stocks, the junior mining stocks in the monthly time frame, still sitting on support at the lower boundary of this upward sloping channel, on the lower boundary of this downward sloping channel, or almost at that lower boundary. MACD in bear mode, energy very low. Of course, the mining stocks are almost certainly going to follow the metals lower. So mining stocks in the weekly time frame pushing down into the support zone, and of course this is just minor support, which may or may not be provided from this prior low. So we'll have to see. MACD is very oversold, so due for a technical bounce in the stocks, but again, with the metals moving lower, not likely that we're going to see that happen. So MACD in bear mode on a sell signal, very oversold, energy very low. Mining stocks in the daily time frame, they're just kind of riding this. This is the upper median line extension of a modified shift pitchfork, just following that level down as support. And of course, you know, it's downward sloping, so it is providing support, but price keeps heading lower. MACD in bear mode on a sell signal, energy very low. We're in the US dollar. It hasn't really strengthened, so no changes from the last time we looked at the monthly there. The weekly, same kind of thing. You know, doji candlestick, the upper and lower wicks are about balanced, so not really a upward or downward bias on that candle. But I would point out that it's continuing with a high consolidation. We're not getting a decisive pullback. Prices remaining high, the dollar's remaining high. It's dealing with multiple levels of resistance. We've got resistance from this prior high, and we've got resistance at this is the second median line extension of this Andrews pitchfork. MACD in bull mode on a buy signal, energy elevated, very elevated, and rising. So I continue to expect ongoing strength in the US dollar. We're not seeing it yet. Here in the daily time frame, it's more obvious, this high consolidation, sideways consolidation, however you want to think of that. Price or the dollar is just kind of bumping sideways, dealing with resistance at the median line of this modified shift pitchfork, and kind of playing with this horizontal level as potential support. MACD appears to be rolling over but still in buy mode, still in bull mode on a buy signal. Energy is very high. So again, my expectation is that the dollar will head higher. I forget which day we looked at this chart, whether it was, I think it was Monday, and I adjusted the upper side of this box so that it encompassed all of this candle. And notice that in the last 2 days, the price or the candle has pushed through the top of that box again. So I'm going to adjust it again to fully encompass that candle. The point is, or what we should notice in this chart is that interest rates continue to rise. And I suspect that that's one of the things that's pushing the metals lower, is that interest rates are rising. Interest rates are rising because nobody wants to buy debt instruments right now. We're in the midst of a global debt collapse. I'm seeing articles today where they're talking about liquidity drying up, which is appropriate. I mean, that's an aspect of a debt collapse, that liquidity is going to dry up. So let's keep rolling with the debt markets. Here's yield on the 10-year daily time frame. And again, just, slowly but surely headed higher. We've got support along this lower median line extension of this shift pitchfork. MACD in bull mode on a buy signal, energy very elevated. Yield on the 30-year bond pushing up into this resistance. This is the weekly time frame, pushing up into this resistance zone. Notice that price is at the high of the bar, bullish looking bar, currently on a sell signal, but in bull mode, suggesting that the trend is upwards. Just like we saw in the monthly gold chart, this is a continuation pattern. You could call it a flag. And so Edwards and McGee, that's the Bible for technical analysts. What they say about flag patterns is that the flag flies at half mast, and that basically when this flag pattern completes, what you can expect, probability, the odds, suggest that you'll get another length, you'll get another move of this magnitude. And just for funsies, we'll draw that. So that would be that leg. Now let's take that. We'll take that bar and move it, assuming that the 30-year breaks out at this point, breaks out from there. That would take us up to 5%. So if that flag is flying at half mast, it suggests that the price target in this time frame is 5%. And so just imagine what another, what is that, 1.5, 1.7, anyway, 5% in the 30. Imagine what that will do to the other markets. And again, with the debt markets moving up, that's probably part of the weakness in the equity markets today. Bitcoin continuing its sideways consolidation this week. Got horizontal support just a little bit lower, have support at the upper median line of this modified shift pitchfork, just a little bit lower. Energy very low, MACD in bear mode on a sell signal. The equity markets, and so they headed lower. They've been heading lower all week, headed lower today. Very bearish close. Notice that price closed at the low. So yeah, actually closed at the low of the day, below the low of the day. Well, that's not possible. Anyway, price closed on the low of the day, which is a very bearish indication. I did notice that we're at the 62% Fibonacci retracement of this price movement that started here and finished here. So, potential for a technical bounce from that 62% retracement, and prices are quite oversold at this point. So again, potential for a technical bounce, but I wouldn't expect much of a bounce at all, if any. Basically, whatever bounce we get, it's just going to roll over and head lower. MACD on a sell signal, not quite all the way into bear mode yet. Energy very low. This is S&P in the weekly time frame. Has dropped below the 10-week moving average, potentially finding support at the upper boundary of this channel. But this level has not been tested as support, so there's no real reason to expect that level to act as support. MACD in bear mode on a buy signal, but rolling over. Based on histogram, momentum is rolling over to the downside. Energy about mid-range, but dropping. S&P in the monthly time frame, notice that there's no support below this level, that basically the next area of support would be 3640, which takes us back into bear mode. And so that would be my expectation, is that the equities are headed back into bear mode. This was nothing but a counter trend rally, and now price has rolled over. So this is Dow in the daily. Again, very bearish close today. Price closing at its low, or very close to its low. Let's see, 509. Yeah, price closed on its low of the day. Very bearish close. MACD mostly in bull mode, dropping into bear mode on a sell signal. Momentum appears to be accelerating to the downside. Energy is very low. Dow in the weekly has dropped through the upper boundary of that channel, which would, we might expect that the same thing would happen with the S&P 500, that the Dow was unable to hold that level. No reason that the S&P is going to do any different. And again, notice that price has dropped below the 10-week moving average and is sitting at the low of that price bar. So again, bearish price bar there. MACD in bear mode on a buy signal, but rolling over. Energy about mid-range. Same as the S&P 500 here in the monthly time frame. Next level of support in this time frame, that's I call it 30,700. And offhand, I don't know that. I suspect that takes the Dow back into bear territory as well. NASDAQ in the daily time frame, again, bearish bar on the close today, closing at its low. MACD on sell signal, dropping down into bear mode. Energy very low. Same thing, potential support at the upper boundary of this downward sloping channel, but given that the Dow has already dropped through that level, I wouldn't really expect to see support there. MACD in bear mode appears to be rolling over, currently still on a buy signal. Energy just above mid-range, but dropping lower. In the monthly time frame, yeah, NASDAQ is back into bear territory and no support. Well, it's currently sitting on this horizontal support resistance zone, so potential for a bounce there. But given that the other markets appear to be headed lower, hard to imagine that the NASDAQ will bounce from here, which suggests that it's headed down to this 34% level, which is the next horizontal support, and that is, what is that? That's 11,000. So, which will also act as round number, potential support at a round number, 11,000. Oil dropped on the finish of last month's candle. Oil dropped lower and has started this month's price bar at that point, but headed higher for now. MACD has rolled over, hasn't given us a sell signal yet, but looks like that could happen. still in bull mode, suggesting that the primary trend is up. With the headed into winter and everything that's going on in the energy markets, reasonable to expect that oil prices will continue heading higher. At some point, Biden has to stop selling oil out of the SPR, the Strategic Petroleum Reserve. How long can America continue selling its oil to China and Pakistan? That's just silliness. And so anyway, another reason to expect oil prices to head higher. So that's all I've got, folks. I wish it was more bullish for both the metals and the equities, but the markets are going to do what the markets do. I will talk to you soon. Bye-bye.